The same retailers that have helped push consumer prices up by 20% over the past 4 years are now getting desperate. As shoppers aggressively tighten their spending to cope with stubborn inflation, some of the biggest retail chains in America are on a price-cutting spree to gain back their customers. With sales declining faster than expected and financial results disappointing, these companies are finally feeling the consequences of the substantial price hikes they've imposed since 2020. To lure people back into their stores, some companies are reporting discounts of up to 30%. Big-name retailers like Target, Walmart, Aldi, Best Buy, and Home Depot are shifting their sales strategies to prevent facing even bigger financial losses in the coming quarters. According to multiple reports, executives are saying that American consumers have become too price-conscious and selective after years of persistent price increases. At this point, not only those at the bottom of the economic ladder are curbing their spending. Chad Lusk, Consumer and Retail Group Managing Director for consultancy firm Alex Partners, noted that upper-income households are also changing their consumption patterns due to lower affordability. The budget-conscious consumer is no longer just low or middle-income earners, he told CNN. By far, the starkest decrease in intent to spend is coming from the higher income groups, and those that were previously the most immune to an economic downturn are now tightening their belts. The rapid change in consumer behavior is prompting swift action by retailers who cannot afford to lose any more customers. Last week, Target Executive Vice President and Chief Food, Essentials, and Beauty Officer Rick Gomez revealed that more than 1,500 items faced price cuts in the past month alone, including staples like frozen chicken breast, cheese, butter, and baby supplies like diapers and cleansing wipes. We know consumers are feeling pressured to make the most of their budgets, and Target is here to help them save more, said Gomez. He announced that more than 5,000 items are expected to see price reductions over the summer. Target plans to offer discounts on items such as meat, bread, soda, fresh fruit and vegetables, snacks, and yogurt in markets ranging from Phoenix and Minneapolis to New Orleans and Baltimore. Although this relief is good news for inflation-weary consumers, these steps aren't being taken just to help people save and improve customer experience. After seeing profits crash by 90% in 2022 and its stock plummet since then, Target is doing everything in its power to stay out of bankruptcy court. During the last earnings call with investors, the company's executive vice president, Mike Fidelke, expressed concern about the impact of slower consumption. Consumers continue to spend cautiously, particularly in discretionary categories, he said in April. At the time, the retailer reported a 3.2% decline in total sales and a 3.7% decrease in comparable sales, while store traffic was down by 1.9%. Similarly, Walmart is slashing prices to improve its financial performance as executives predict a softer sales outlook for the rest of the year. After increasing the price of basic essentials by more than 22% since 2021, the industry titan is now conducting what seems to be the biggest price-cutting spree among retailers so far. CEO John Furner told us, "Well, broadly across the store, we'll have almost 7,000 rollbacks. That's really helping in our food categories. We see an even larger spread between eating at home, preparing meals at home, and eating out, which we think can help Walmart more over the remainder of the year." Amazon's grocery stores are also having to adapt. A couple of days ago, Amazon Fresh revealed it will cut prices on 4,000 grocery items in-store and online, with shoppers seeing discounts of up to 30% every day. These reduced prices will apply to items from national brands as well as Amazon's own store brands. Worldwide Vice President of Amazon Fresh, Claire Peters, said, "Increasing our weekly deals across thousands of items and expanding the reach of Prime savings at Amazon Fresh is just one way that we're continuing to invest in competitive pricing and savings for all of our customers," both in-store and online. The reality is that the grocer has seen sales dip by 2.4% in the first quarter, and before that, it was forced to close dozens of underperforming stores to save on costs. The chain is struggling to compete with other companies, and this broader trend of tight consumer spending could spell trouble for Amazon Fresh. Even discounter Aldi is following its rivals' footsteps as it lowers prices to entice customers. The supermarket chain said in May it will cut prices on hundreds of products, including favorites for barbecues and picnics, as part of a promotion set to last through Labor Day. According to retail experts, grocery chains will deal with the biggest profit challenges due to the expected changes in transaction volume and purchase quantity. While price reductions can improve sales numbers, they can also result in declining revenue and, in some cases, severely hurt a company's bottom line. Despite the discounts, grocery prices are not expected to return to pre-pandemic levels anytime soon. In the non-food category, CEOs are also noticing a downward trend. Best Buy Chief Executive Officer Cory Barry said during an earnings call that their customers are having to make tough choices with their budgets. The executive pointed to changes in the macroeconomic environment since the electronics retailer's last quarterly report 3 months ago. There were several indicators showing some favorability, including decreasing inflation, continued low unemployment, encouraging trends in consumer confidence, and the beginnings of a housing market rebound, Barry said. Since then, inflation is still high, mortgage rates are still high, and consumer confidence scores are trending lower. A recent survey by Advantage Solutions found that 55% of shoppers say they have opted to buy less expensive products due to higher prices. It also showed that 52% have switched to buying lower-priced brands, and 54% have cut how much they buy over the past year. 1/3 of shoppers also said they've changed where they do their shopping in an effort to save money. Conditions are tough for the country's largest pharmacy chain as well. On Friday, Walgreens said in a press release that its customers were under financial strain. Tracy Brown, the company's chief customer officer, highlighted that Walgreens understands its customers are struggling to purchase everyday essentials. We continue to be committed to our customers by lowering prices on over 1,000 items, she stressed. The announcement came as the company lowered its full-year earnings forecast due to the shift in the retail environment. Walgreens shares are down 40% this year, and its latest earnings report showed a 4.5% drop in retail sales and a 4.3% drop in sales year over year. Struggling with the impact of higher mortgage rates on would-be homebuyers, Home Depot sales continued to soften in the first quarter. The nation's largest home improvement retailer reported that sales slipped 2.3% to $36.4 billion for the period ended April 28th. It was the third consecutive quarter of declining sales for the retailer, which saw impressive performance during the pandemic. Customer transactions dipped 1% in the quarter, with shoppers also spending less, while sales at stores open at least a year, a key gauge of a retailer's health, declined 2.8% globally and 3.2% in the United States. Americans are pulling back on large home remodeling projects like bathrooms and kitchens, and that is hitting Home Depot. Neil Saunders, managing director of Global Data, explained, "Many more households are reluctant to undertake activity due to financial constraints or the higher cost of using credit to pay for work." He added, "We're also detecting some hesitation among consumers who hope to move in the future, so they do not want to undertake big improvement projects in the homes they currently live in." Retailers recognize that unless they pull out some stops on pricing, they're going to have difficulty holding on to the customers they have. The consumer really has had enough of inflation, and they're starting to take action in terms of where they shop, how they shop, and the amount they buy, said Saunders. While discounts are an everyday tool in retail, these massive price cuts that cover thousands of items announced by a number of retailers represent a significant transition from recent patterns. Most companies talked about price increases in the past 2 or 3 years, and these cuts mark the first big price war since before inflation started taking hold. Even though official inflation numbers are going down, Americans simply aren't feeling the real effects of this on their daily lives just yet. These factors help explain why real spending has been falling across the board for several consecutive months, with consumers spending less on cars, restaurants, and recreational activities. With the job market also cooling, companies are currently bracing for the worst. Middle-income consumers, who account for almost half of U.S. consumption, have been feeling the squeeze of higher prices for years. Today, their purchasing power is not the same as it was in 2019. They've also accrued more debt and are increasingly relying on credit cards and other sources of financing to support their spending. A survey conducted by financial services firm Primerica found that 67% of middle-class respondents said that their income was falling behind the cost of living over the first quarter. Among those people, 74% said they were pulling back on discretionary purchases such as eating out. Nationwide, the savings rate of average Americans now stands at a 16-month low. The personal savings rate slumped to 3.2% last month, down from 5.2% a year ago. Meanwhile, the bills are still piling up for U.S. households. Total household debt surged to a record $17.6 trillion over the first quarter, according to the New York Fed's latest household debt and credit report. Nearly 9% of credit card loans and 8% of car loans became delinquent over the first quarter, Fed data shows. Slower labor market momentum will continue to limit income growth and push more families to exercise spending restraint amid reduced savings buffers and higher debt burdens. Gregory Dacko, chief economist at EY Parthenon, said in a note on Friday, factoring increased price sensitivity, household spending momentum will gradually cool. The American consumer is losing some luster. The retail sales number was sluggish with a capital S, economist David Rosenberg emphasized in a note this week. The downward revisions to the sales numbers are an important red flag, he said, because these suggest the economy has been far less strong than previously displayed. With all that said, we can understand why the landscape of American retail is looking so gloomy right now. At the end of the day, this isn't just a story of bottom lines and profit margins. It's a battle for survival in an unforgiving marketplace. Make no mistake, beneath the veneer of benevolence lies a stark reality for these behemoth companies. This shift in strategy is waged not out of altruism, but out of necessity. With profits plummeting and stock prices tumbling, these retail giants are fighting tooth and nail to stay in business. Amidst the chaos and uncertainty, one thing remains abundantly clear. American consumers are now finding themselves precariously balanced on the precipice of financial ruin. How are you coping? We look forward to reading your comments and thank you very much for watching.